candid conversations, unfiltered opinions, and humor with Abeg's podcast.
Hello, world. Welcome to another episode. It's going to be a learning one. So pull up pen and paper in hand. All right.
Yes.
It's going to be fun, learning, quite energetic. I've met Mario, and Mario is a personality. So you're going to learn a few things and laugh along the way. So please, please, please help me welcome today's guest. He's a certified financial planner, Mr. Mario Payne.
How are we doing today?
We're doing. I'm very grateful you make time to be here with us, Mario.
Oh, pleasure's all
So,
mine.
how was your day so far? And what are we to expect today?
Yeah, nah. I mean, every day's a good day. You wake up in the morning time. I'm in beautiful Florida. I'm in Jacksonville, Florida. So the cost of living is not as high as Orlando or Tampa or Miami. We pay no state taxes. It could be December and it could be 65, 70 degrees. So I have nothing to complain about at all.
I hear that. I hear that. So, financial planning, right? Something that we don't do, most of us, right?
Yeah.
Especially business owners. So, why financial plans, sir?
So why financial plans?
Yeah, why? Why do we need to have a financial plan? What is the use of it? We could just hope for the best. Why not?
Yeah. Yeah. Well, that's what people do. That's why we do financial plans because people hope for the best,
Yeah.
but they don't plan, so it ends up being the worst. So from so I'm a certified financial planner. So just quick background about myself. I've been practicing for 18 years. I'm a certified financial planner. Less than 2% of advisors are certified financial planners in our community as African American. For every 1,000 insurance agents or advisors, you have one CFP. So there's not a lot of certified financial planners. I started my own practice 13 years ago. Wow, I'm old now. I started my own practice 13 years ago. Tones Financial Tithe Offering Alms means stewardship. So I'm a good steward of your money. Then preferably you be the tithe, offering, and give alms, which means me being a steward of your money. So yeah, so we basically help people reduce their tax liability and increase their net worth through investing in financial planning. So if I want to retire, what does that look like? If I want to start a business, what does that look like? And we give you the tools, the equipment, the pick and shovel, and also the knowledge to do those things. So anything and everything dealing with managing money, growing your money, setting up your business, reducing your taxes, we do. And I'm certified to do it.
Wow, that's beautiful. So you mentioned you're in Florida. So how does
Yeah.
that work for people that live outside of Florida?
Yeah, great question. So my firm is registered to the SEC, the Securities Exchange Commission. So I don't have clients just in this country. I have clients in 9 different countries. So this extremely blessed. It doesn't matter where a person's from, if they're a right fit, if we're able to help them and scale their business or scale their finances, then they can definitely allow us to use them from a service standpoint. But you got to be a right fit because no, I was saying the reason why is because people are in different walks of life for their financial journey, right? So a person that's just starting, they might ask the question, "Hey, I got $10,000. How should I invest?" Might not be the best for us, investment wise, but it might not be the best for them either, because I always say the best investment you can make is in yourself. So a lot of people watch YouTube, Instagram, put $1,000, and now you got 100,000 overnight. It doesn't work like that with investing, right? It's kind of time in the market, not timing the market. So when a person first starts, we actually recommended them invest in themselves, start a business, invest their money into a business, do coaching, invest their money into coaching, do a paid mentorship, invest in those mentorships because that's going to allow you to get to the bag quicker. And then once you have that bag, then we start to invest and have your money grow that way.
So you mentioned $10,000, right?
Mhm.
And
Yes.
in today's America, not a lot of people have $10,000 just laying around. So what if somebody does not quite have, you know, the that first bulk investment? However, they want to learn on how to better position themselves to not only bring that bulk in, but make it a good decision with that bulk when they get it. So, how does that work with working with you?
Yeah. So people pay, and I say this all the time. People pay when they pay attention, meaning that I can say, go to YouTube University and follow a person on Instagram and follow them, and you will do it, but you're probably not going to execute because you're spending time. And we don't look at time as money. We look at money as money, right? So case in point, Fiji water, right? We got two waters, right? Right. What's the value of this? I might value Fiji water at $4.50. But if I'm thirsty, I just had a 5 mile run and I'm as thirsty as I can be, I might pay $30 for this Fiji water, right? Because I value it different, right? But if I'm just having something given to me, like on YouTube, where somebody gives me this water, I might not value it as much. So I say that to say going on YouTube University, going on Instagram is good, but you're not going to value that content. You're not going to step into it and execute because you didn't spend any money. So I recommend people joining investment communities, getting like a coach. And I wouldn't even say from an investment standpoint, I would say from like a self management and self coaching standpoint, because you're going to make more money quicker invested in yourself than you will invested in the stock, right? Now, the person who made Amazon is Jeff Bezos. Jeff Bezos made a lot more money in his company growing than Jeff Bezos investing in a stock and having it grow. So if a person has, a thousand, five, $10,000, I recommend whatever you're in. If you're a W-2 employee, find some type of business coach, some type of corporate coach that's going to allow you to grow and get a promotion. So if I'm making $80,000 a year in corporate America and I get a business coach, and this time next year he or she puts me in position to make 120,000 a year, that's a 50% return. I don't know if you're going to get a 50% return on your investments. The market makes 9% a year. People do options that make more, but most people who do options lose money. So when you have a smaller amount of money, I recommend investing that into yourself via coaching and mentorship. And then as your money grows, as your money multiplies, then with that larger amount of money, that's when we start getting to stocks or real estate.
All right. Thank you for that. And
You see,
talking about
you see
coaching,
that see that mindset shift right there.
it is a mindset shift, but
Mhm.
the beauty of this platform is to make sure that we have this kind of conversation,
Mm,
because not everybody looks at things in the way that you have presented it, right?
yeah,
We are very much in, as much as life is not black and white, we're very much in a society that promotes that black and whiteness. You see the overnight successes on YouTube, Instagram, TikTok,
yeah,
all of that stuff.
yep,
It may look overnight, but there was some form of investment that went into it, whether it was, scrolling to find that right content, to find that right whatever, or, YouTube University, like you mentioned, pinpointing exactly what it is that you're looking for, right? So the value of this conversation is invaluable. Talking about your Fiji water example, everybody wants something very concrete, but for you to get to that concreteness, there's a path to it. There's a journey attached to it, and
right.
that is something that I think most times we lose sight of.
Yeah, it's interesting you said that. So we're here in my studio office, but at my actually office that I own, which was a crazy story by itself how I bought the office. But like I have a whiteboard and it says, "Life is a journey, retirement is a destination." Meaning that we have so many ups and downs along the way, right? Life be lifing, right?
Woof!
Yeah, right. Yeah, yeah. So
The
yeah, so
word.
yeah, so going through that process. So once we get to a destination, we feel better. So people have different investment journeys, right? People invest money conservatively. It might take them longer to get to that destination. People invest aggressively, they'll probably get to that destination a lot quicker, but a whole bunch of bumps along the way. But from my end, we want everybody to invest, but I am practical. So because I've been practicing for 18 years, I'm SEC registered. I manage hundreds of $millions of assets. I don't have to say stuff to get clients. Like I want to be just as straight as possible. And when a person first starts, it's better, in my humble opinion, for them to invest in themselves, either level up in their corporate life or level up in their business. And so now, as they have more money, use that extra money to invest, and that's the way to go, in my
Absolutely.
opinion.
Absolutely. And, different strokes for different folks. That there are other ways to go about it, but that seems very practical. So when it comes to self-investment, there are coaches, there are mentors, there are all kinds of people out there. It takes due diligence to find the right coach for a person, right? And not every coach can coach everybody, right? And, found out the hard way after investing in myself. However, what is your key components? You can tell our listeners in looking for a coach and looking for a mentor, whether it's business, whether it's professional, or whether it's personal. What are those key factors that you should look for in a person to coach you before you actually make that investment to, have this person involved with you?
Yeah. And so my first mentor, I and it was biggest investment. So again, backstory. So I've been blessed to make $1 million a year for for now 11 years, right? And I was stuck in between 1 million and 2 million for a very long time.
Yeah,
I basically hired my first coach, mentor, uh, um, if I can say, yeah, the Haitian CEO, everybody knows him. So his name is Herman Dosey, but everybody calls him the Haitian CEO. And yeah, like he's like, man, Mario, like you have a story, like you launched the first black-owned ETF ever on the stock market. You have a best-selling book. You have this large practice. You should stop being a person's secret weapon. Because um, I always loved the fact that, like, I was like the best kept secret for my clients. Like I bragged about, I don't do any marketing, I don't do any advertisement. I'm all referral based only. He was like, Mario, this is the stupidest thing in the world. Like, you have a gift, why not share it with everybody? And then, like, that mindset shift right there was like, I need to do a lot more on social media. I need to be on podcasts, and then just grew. And then my last mentorship, I had Myron Golden, and I've paid over 100,000, well over $100,000 in mentorships over time. So my mentorship with Myron Golden by itself is $55,000 a year. And then again, just that mindset shift. So the first thing is that when it comes to Herman, he always says success has receipts. So basically, you want to have a coach that basically has receipts, right? It's not just a person just on Instagram, but you're seeing people. And I would actually ask that coach, can you give me testimonials? Can I have either Instagram handle or a person's phone number so you can vet them? Because we have a lot of these quote unquote gurus in the world. Another thing as well, I would actually have a person that has licenses, because a coach with no license that can tell you anything, they have no fiduciary responsibility. It's just no backlash. Like me, I'm a certified financial planner. Like, if I'm coaching a person, it's not coming out of just fluff. It's coming out of me being licensed. If I say something wrong, do something negative, do something I'm not supposed to do, I get my license taken away. My practice can leave. So, like, you want a person that has something to lose, not from a marketing standpoint, but from like a license standpoint. So those are the two things I would say. And actually, to get back to that, to Herman, another thing that he does as well, which I love, is that he does group calls. So when I first, and again, when I first started just as a financial advisor, I did not want other people to kind of know what they had going on, because you're dealing with money. Things are secret. Of course, one person doesn't know what another person's doing, right? But I learned, you learn so much more from group coaching, right? So let's say we're having a conversation, and we have an appointment. You're going to have about 5 or 6 questions, right? And then after I answer those 5 or 6 questions, we're probably going to go on a tangent, right? We're going to be talking about other things. I'm repeating what I said, and then we're going to be doing 30 minutes of fluff, just for fluff. So we might spend 10 minutes on question Q&A, the other 20 minutes or just whatever. But if it's group coaching, so instead of me and you, now it's me, you, and 9 other people, they have questions that you didn't even think of. So now they are pouring into you and you don't even know it. right? So that shows my expertise. I'm able to answer those questions. So now you feel better about me being a coach because I'm answering your question, another question that you didn't know about. You feel better, period, because you're getting questions answered that you didn't even think of. And you have that community feel because people are in your shoes. So now once we get off the Zoom call, you're not defeated or feel like I told you stuff and you're not doing it. You're like, oh, okay. Well, that person was where I was at. I am growing. That person's where I want to be. It could happen. It just makes life and your journey so much better. So that'll be the three things. Success has receipts. Make sure that they have some type of license, but make sure it's group coaching, not one-on-one coaching.
Beautiful. And in all of that, you've mentioned mindset a few times, and I want us to kind of like lean into mindset a little bit,
Yeah.
or a lot of it, whatever you're in the mood for. So, and there's something that I see in us, especially like entrepreneurs in the Black and Brown community, especially in the Black community, we have a tendency to play down ourselves. I don't want to say
Mm,
play small because we're anything but small,
yeah.
right? We have a tendency to play down ourselves, be the best kept secret. It's like, okay, I'm good within this little community of mine. The people that know me are, referring me to, people that they know. So we thrives in that, is, I'm known, in my community. Why do you think that is? And you mentioned the pivotal point that helped you kind of like click over that mindset. But how difficult was that process for you?
I mean, very difficult. I mean, and we're comfortable, right? We are comfortable, and I was comfortable. I mean, I was comfortable. A great living. Office paid off. No debt besides my mortgage. Thousands of clients. Blessed. Getting invited to retirement parties, weddings. Like I had a good life. So like, why put myself out there? And so the fear of rejection. So now if I'm on social media, do a podcast, and I ask people to join my challenge or to use me as a financial advisor, if I ask 1,000 people and one say yes, it's like, oh man, am I this bad? So I think we're comfortable, and I think it's the fear of failure. And
Yeah.
and to the point, the crazy part was that from that journey of now putting myself out there, doing way more on social media, finding out how you can conquer fear, I turned that into a best-selling book, right? Uh,
Okay.
right. So yeah, so my best-selling book, The Relaxed Investor, it talks about your decision-making process. And I call it the relaxed investor because you investing in yourself. And again, yes, I'm a certified financial planner. Yes, we invest people's money for a living. But as I continue to say, the biggest investment that you're going to have is in yourself. So I came up with an acronym to help you through if your decision ends up being a great decision or a bad decision, you don't regret it. So, case in point, 2008, the Great Recession. People lost 40 to 60% of their money in the stock market. Never happened since the Great Depression. When people, it was a survey done by JP Morgan. People who lost more than 35% in their 401k, they put their money in cash. It took them 3 years to feel comfortable to put their money back in the stock market. So when the market went up in 2009 and 2010 and 2011, they missed out. So they would have made their money back and then some if they would have stayed in the market. But because they were so fearful because their money went down, they didn't do it. So I came up with the acronym for relax. So the R means research. Okay. The E is evaluate. So we have to first research, then evaluate. The L means locate. So we research, evaluate, locate. The A is analyze. So when we say analyze, you want to analyze yourself. Look in the mirror. If this decision goes good or bad, can I live with it? If the answer is yes, then let's go with it. If the answer is no, then let's not go with it. And then the X. And the X is execute. Because we can watch podcasts, we can watch this great show that you have on a weekly basis and get all this information that you're given. But if we don't execute, we're just wasting time. So that allows us to go through the process. And if we make a good decision, if it turns out to be a good decision, or if it turns out to be a bad decision, we can still live with it. So that's why we created the Relax Investor because it's investing in yourself. And once you invest in yourself and once you feel good about your decisions, that they go right or wrong, the sky's the limit from a mindset standpoint.
Beautiful, beautiful. Thank you. And just to give a little bit of that, I think the fear of rejection or the fear of the unknown is something that if a lot of people do not have people within their immediate circle or nucleus have that for lack of a better, knock if you buck is coming to mind right now. That mindset of going at it, it's kind of like it's kind of like, okay, am I going to be accepted? And life experiences also plays into that a little bit. So talking about your book and having to write that book regardless of what your perceived fear was, that's commendable. And also, please, where can we find that book real quick before I
Yeah,
move
yeah,
on?
oh yeah. Oh yeah. So you go to Amazon.com. You either go to Amazon.com or my website, www.therelaxinvestor.com. You can buy the book there. But you're on Amazon every day anyways. Just go to Amazon.com, The Relax Investor.
I love it. So, the stock market investment is something that people shy away from, or they fear the market crashes, and the market crash, it goes up and down. That is just the name of the game. So, how do we get people to? Again, I don't know what your background is, and if you want to share it, that's fine. How do we get people to not just focus on their immediate surroundings, because that is what locks people into, whether it's comfortability because they're well off, or comfortability because they don't want to step out and risk being hurt, right? So what can we do as as a community, as a person? You can't force anybody to do anything, but
Yeah.
what can a person do that is looking to change their lives or change the outcome of what their reality is?
Yeah, yeah. So three things. Three things. The first is long term. If we invest in a stock, we're not going to hold this stock for 1 month. We're not going to hold this stock for 6 months. We're not going to hold this stock for a year. This needs to be 5 to 10 years. Because to your point, every single day the market goes down. Every single day. But over the course of a year, the market goes down 4 months out the year on average, and 8 months up on average. So historically, I like the odds of something going up 8 times compared to 4 times when it goes down. But if I'm holding something for the short term, those odds aren't against me. What if I invest in for those 2 months it goes down and I get out? I've missed out on the other times it's going to go up. So we have to be long term. The market goes down every single day. That's what a market is. It's inefficiencies, right? Roller coaster. But if you look at the chart, that roller coaster always is higher 5, 10 years from now. So that's number one, the long term. Number two, dollar cost average. DCA, dollar cost average. So dollar cost average is me putting in the same amount of money every single week or every single month, no matter what happens. If the market goes up, I'm happy because my money's going up and I'm putting more money in it. If the market goes down, I'm able to buy things at a lower price. Let me ask you a question. If you had Apple stock, for example, would you rather buy Apple stock at $500 per share or $200 per share?
200.
So why is it when it goes down from 500 to 200 people sell?
So it's I think that's human brain. Your brain is protecting you because people are nervous. Okay, it's going down. It may go down further, so let me sell while I can. But the same is true. It will go up. So it may be falling now, but the tendency is that it's going to go back up. So people try to protect themselves by selling to get out, to get something out of it while they can.
Right. And that's why dollar cost average is so important because when
Yeah.
it's going up, you're making money. When it goes down, you buy at a lower price. And that leads me to number three. Think with the chart, which is an investment chart that always goes up, not with your heart. I got this feeling it's gonna go down, and when it does, I'm upset. No, our heart leads us
Don't do that again,
sometimes.
Mario. Just leave the singing alone.
Right? So our heart leads us in the wrong direction. So we always say, think with the chart, not your heart.
Yeah,
A chart. If
right.
you look at a chart of the S&P 500, the top 500 companies in America, you see over the course of time, it always goes up. Now, it's bumps along the way. But when we look at that chart, we're like, man, I wish I would have bought it when it was down.
Yeah.
Man, I wish I would have bought it when it's down. So you know that. So you're thinking with the chart, but you're making decisions with your heart because when it goes down, you sell. So if you do those three things, right? Long term, 5 years or more, dollar cost average when things are going up or down, and think with the chart, not with your heart, it is no way you're going to fail investing your money.
Mm, absolutely. So we're talking about risk, right? And the people that are risk adverse and people that run into risk because they foresee the reward. It's kind of like Martin Luther King said, faith is, going up the stairs without seeing where it leads, taking that
Mm,
first step. So what do you advise or what do you say to, say, in a couple, right? A husband and wife. One person is risk averse and the other person is runs into it.
yeah.
When it comes to investing, even outside of the stock market, so investing in like real estate or franchise or businesses in the community.
Yeah, and that's interesting because well, first off, they want to go through the decision. They want to invest in themselves and go through the decision method, the relax method, right? I would say do that first
Okay.
because it's gonna be able to give them a basis of if things go wrong. And with investing, things go wrong. We watch Instagram, everybody's making money with these great investments. That's not the case, right? Things will go wrong. But if we kind of go through that decision make method, we're not going to be as upset and we're going to be okay because we know we went the right decision by going through the process. So that's the first thing. The second thing, I tell people, uh, constant wealth was created by concentration, and wealth is then made and preserved through diversification. Say it again. Wealth is created in concentration, and wealth is preserved with diversification. Meaning, the people who made the most money focused on one thing and one thing only. Jeff Bezos, what did he focus on?
Amazon,
Right. Steve Jobs, what did he focus on?
Apple,
Bill Gates, what did he focus on?
I'm thinking Macintosh, but Windows,
Yeah,
yeah,
Microsoft, yeah. And
yeah,
Mark Cuban, the Dallas Mavericks, right?
Dallas Mavericks, yeah,
We don't see these. Oprah Winfrey, what does she focus on?
television,
Harpo, right?
yeah,
Yep. People super, super focus on one thing, put all their resources, all their time, energy, and then they just grow. And then once they get to the point where they need to protect their assets, then they diversify. Then they buy real estate. Then they, buy stocks in the stock market. Then they do their own solo 401k where they have a 401k in their company where they have all those write-offs. So for a husband and wife, I would say first concentrate on one thing, not 15 things. What's that one thing that's gonna make us the most money? If it's real estate, then let's just kind of pour into real estate. Let's, buy dilapidated properties, do the opportunity zone, which we can talk about here shortly, where you're able to buy a property in a dilapidated area and then because of the Trump bill, hold it for 10 years, have it grow and not pay taxes when you sell it, and borrow against it every single year and take that money out and buy another property the whole time you're not paying taxes on it. That is how we become super concentrated into something. And then once we get to that bag per se, then we diversify in other things. So I would tell a couple, don't do three, four, five, six different things. Be super, super concentrated on that one thing so we can build wealth. And then once we feel like that wealth is built, then we become diversified in other things.
okay. So please go into the opportunity zones because I'm quite interested in hearing that.
Yeah, yeah, yeah. So because of the big, beautiful bill, A opportunity zone is where we're able to buy something in a dilapidated property. So this happened in 2017 as well, and then it went away. So I'm not being political. I always say, doesn't matter who's in office. Our one job is to make money, provide for our family. Do I agree with the president's doing? Of course not. Nobody does. Well, people do, and they don't, but they say they do, but they don't. But whatever though. But I don't. But whatever though. He's the president, so it's either
Yeah.
we deal with him from the sidelines or we make money because of what he's doing.
Mm.
So case in point for my clients, February 14th, he came out, Valentine's Day. He came out, said, I'm going to do tariffs in 60 days. I was like, you know what? He's been talking about this for 5 years. It's going to happen. My clients, we sold out at least half of everybody's portfolio out the market. What happened? The market went down by 22%. So my clients had, if they had $100,000, when the market went down by 22,000, they went down by about 5,000. They lost, but I'm gonna ask you, would you rather lose 5,000 or 22,000?
Fine.
Okay, 5, of course. So then after that, he said Liberation Day. He said, you know what? It is what it is. We're going to do tariffs. And then, okay, it's already done. So 2 days later, we got back into the market. Since then, the market has got back to where it was more. But since we sold high and then bought companies at a very, very, very low price, when the market got back up, our clients tripled the market. Right now, the market's up by 7% this year. Our conservative portfolios are up by 25%. On $100,000, everybody made $7,000 this year. Our clients who are conservative made $25,000 because we're taking advantage of what the president's doing, right? So I said that to say, you like them, you don't like them. It's money out here. Provide for your family. The president don't care about you. He don't care about nobody but him. We know with the Trump coin, we rug pull everybody, right? So care about yourself and take advantage of it. So that's that. All right, opportunity zone, right?
Yes.
So opportunity zone is when if I buy a property in a dilapidated area or gentrified area, right?
Right.
I am able to take money, doesn't matter if it's $1 or $100,000 from my stock portfolio, sell, right? It doesn't matter how much. It could be $1, meaning I could have $1,000 in a stock. Now that stock is worth $105 and I sell. That $5 of gains, if I could put that towards the purchase of a dilapidated property, right? So let's say the property's worth $30,000. I buy it in the hood, right? It's $30,000. As long as I spend whatever I paid on that property in remodeling over 18-year time period, it qualifies to now be tax deferred. So I bought a house for $30,000. It could be a loan. It doesn't have to be cash. It could be a loan for $30,000. As long as I put $30,000 of remodeling costs inside that house over 18 months, then I qualify for the tax deferral. So now I don't pay taxes for 18 months. Then if I don't sell it, I can rent it out. I can do a refinance as long as I don't sell that property for 10 years. 10 years or later, when I sell that property, I pay no taxes on the money that I made. So theoretically speaking, bought a house for $30,000. I put $30,000 in it. So now my whole cost is $60,000, right? 10 years later, it's regentified. So now that $60,000 house is now worth $500,000. I sell it for $500,000. I pay no taxes. That right there would have saved you $85,000. What if we do that 2 or 3 times?
Yeah.
And what if we buy the block like we always talk about? We're getting an incentive. The federal government in our community, the federal government never let us do anything. They redline us, right? There's a lot of stuff that they don't do, but they are giving us an opportunity right now to buy in our community, provide a resource and housing for people in our community, make money by renting out in our community, and then 10 years plus later, sell it and not have the IRS taxes for anything. Everybody, I mean everybody who is in real estate should be taking advantage of opportunity zones like it's nothing, because it's free money that the IRS is giving you. The question is, are you going to take advantage of it?
Wow.
Mic drop.
That is some gem you just dropped there. That was really really good. So for anybody that is interested, whether investing in real estate, going into real estate, how can they find opportunity zones within their state or within their communities?
Yeah. So they either go to your the state website. They can go to
Okay,
HUD, HUD.org.
right,
Um, you go to HUD, go to ChatGPT. Now you want to verify, so I say go to
right,
ChatGPT, Gronk, and Perplexity. Right, that's basically the three layers of. And we could talk about how I use AI in my business as well if you want to. But yeah, so that's the three layers of verification: ChatGPT, Gronk, and Perplexity to make sure it's there. Or you can just go to HUD.org and it'll let you know. And I'm again, I'm going through our third one. I mean, we did two. We did two. Now we're in the process of doing three. I do hard money lending where we lend out to individuals that are doing construction loans. This person for whatever reason couldn't pay their construction loan. We usually give them 3 months. I gave them 6 months to pay. They didn't pay, so we had to foreclose on it. It was an opportunity zone. So now we're going through the process as well to making sure that this is going to qualify for opportunity zone. And that was in a lower income area in Pittsburgh. So yeah, so something I would strongly recommend, but HUD.org or type in the address, and then again, this goes to those three AI verify, right? So again, you have Gronk, Perplexity, and ChatGPT.
beautiful. So we're going to get into AI because that is something that people still shy away from. I don't know
Yeah.
why, but let's talk about, we talked about mindset. How important is it for a person to align themselves with people of like, successful people? Because there's this saying, I don't know who started it: if you're hanging around broke or little-minded people, there's a high chance, if you're hanging around four, there's a high chance you're the fifth one, right? When it comes to growth mindset, you talked about your client portfolio selling, and coming out on top, when before the market went down, and also positioning themselves to be able to buy when it was um, low. So how important is it for somebody to handpick the people they surround themselves with?
Yeah. So in real estate, they say location, location, location. How you grow is all about your location, your proximity. It is huge. That's why, and I know I sound like a broken record. I ain't trying to sell nobody. I mean, you don't got to use me. You can do what you want to. That's why mentorship is so important. So when I got into the mentorship with Myron Golden, it was like-minded people like me, a room that I have not been in. Right. So first off, people were paying at least $55,000 a year. So that weeds out a lot of people. Right. People can say what they have or what they do, and they might have the money to afford it, but if they don't spend the money, then are they really working on themselves? So you're in a group setting with individuals who have the same goals as you. They want to scale their business. They want to scale their finances. You're also in a group of like-minded individuals that did the same thing that you did. Not only said they want to do it, but they want to do it with their money, right? 55,000 is a lot of money. A lot of money. That's a person's salary. A good living, actually, right? So mentorship is important because you're in around like-minded people. It's the old saying, you want to have the worst neighborhood on the best block, right? And when you're in a room, I want to be the not so smartest person in a room of smart people. When I'm in a room, I want to be the brokest per se when it comes to the brokest person in the room compared to people that's in the room. I don't want to be in a room where I got all the money in the world. I'm the smartest person. It doesn't help. So how to get into those rooms? I would recommend again mentorship. I would recommend we go to events, do VIP. So we just did InvestFest. I did Platinum VIP, right? So they had General Admission VIP and Platinum VIP. Me being Platinum VIP, I was in rooms with like-minded individuals who wanted to spend, who wanted to really grow, right? And I made so many relationships. I mean, I got my money back already from a person who saw me on YouTube, and because I was in Platinum VIP, said, okay, this person is real in real life doing something. And then I'm being helping from a service standpoint. So the amount that I paid, I got that back already. So yeah, so I would say VIP anywhere and everywhere, or the highest amount of VIP. right? And then the mentorship. Like that's how you get into those rooms. If you want to do it the organic way, then of course you start your Facebook. I mean Facebook. Wow, am I old? It's funny. It's about old. So talk about VIP night. Tangible. It's funny, right? So talk about VIP night. I was talking to a person. He was 22 years old, and he saw my Instagram. He's like, "Hey man, like, can you give me some advice? You talk about investing." I was like, "Yeah." I was like, "What do you do?" He told me, I like, "How much you making?" He was like, "Well, I'm actually hit my first $100,000." I said, "Well," I said, "For years." Like, no, a month." I was like, "Okay." I said, "So how you celebrating?" And he was like, "I don't celebrate." I'm like, "Wait." I said, "You made in 1 month when it takes a person and being in corporate America for 35 years to make in 1 year. You're not celebrating." And so like I have a videographer. Everywhere I go, I have a videographer. So the videographer recorded it, then I posted on Instagram, and he replied, he said $1 million worth of gain from the OG. I'm like, OG? Like, when that become an OG? Like that just,
Welcome
OG.
and pat yourself on the back. You're an OG.
Yeah.
It's
Yeah,
okay.
yeah, yeah.
Lean into it.
Yeah. But to that point, when I talk about being in a room, like if I would have never met him, uh, he would never have met me if he didn't pay for VIP and I didn't pay for Platinum VIP, right? So, and he's a software developer, so because of what he's doing, I'm like, man, first off, whatever he's doing, I want to see how I can scale up creating software. We create software now, but I
Right.
want to lean on him. But then him seeing me on Instagram, I'm a real person. He's probably going to have me do his stuff going forward. I mean, he's already sent me 2 texts to do, to set some time. So again, it's being in a room of like-minded people, and you do that either paying for like VIP or mentorship, or organic, which is being on Instagram, being on TikTok, and really kind of growing that way. But the quickest way, I think, is paying. I mean, you got to pay for play, but if you pay for play, you're going to play a lot quicker than being organic.
Yeah. Beautifully said. Thank you. So, talking about software developer, let's segue into AI. What is the fear you believe people have of AI? Especially, we're talking about being an OG, especially OG business owners.
Okay. I got to embrace it, I guess, then, huh?
You have to. You have to. With honors. It's an honor. How many people didn't make it to this point? And you're here,
That's
right?
true. That's true.
Okay. There we go. Embrace it. So, what is the fear? What do you see that is a hesitance of people embracing the use of AI in their businesses?
They're afraid it's going to take the job away. And I tell people it's two individuals, and it depends on what you want in life. The ones who want to continue to be here and be competitive 5 or 10 years, those are the ones that are using AI, assisting them in their business to grow, or even to personal develop themselves and be better. That's one set of people. The second set of people is the ones that are running away from AI. They're going to see their jobs go away in 5 to 10 years. 5 years, probably not 10 years, right? So who do you want to be? AI is here. It is not going anywhere. If anything, it's going to accelerate. The Industrial Revolution took 30 years. This kind of shows you how quick tech is. The Industrial Revolution took 30 years to plan and another 20 years to implement. So it was 50 years of the Industrial Revolution, right? Then the computer revolution back in the early 2000s, like AOL.com and all those types of things, information superhighway, it took 2.5 years to plan and 3 years to implement, where we went from dial up to basically from dial up to plug in to Wi-Fi over about a 5 year time period. So the industrial revolution took so long, and the computer revolution took so long today, but it was very, very short. AI has evolved 3 different times in the past 3 years. When ChatGPT 1 was introduced, it was like, oh my gosh, we're on ChatGPT version number 5. 3 years ago, Perplexity was not around. A year and a half ago, Gronk wasn't around. Technology doubles every 6 months. Imagine 5 years from now, 10xing what we're doing now from technology.
Yeah.
Jobs are going to go away. So if you don't find a way to use AI to your advantage, you don't find a way to level up your business right now using AI to not fire your staff, not cut resources, but now give your staff the opportunity to do more things, to
Yeah.
be more productive
Yeah.
because of AI. I have 18 staff members, and we have two AI specialists. I don't think that's enough. I need to hire another one, to be honest with you. Right? We have two AI specialists. Their one only job is to find how to automate and use AI in my 5 different businesses. Right? Because of doing that over the past basically year and a half, we have um, been able to increase our productivity probably about 200%. My staff, instead of doing 4 or 5 tasks a day, now they're doing 15 to 20 different tasks a day because AI is assisting them.
Right.
It is no way that I could basically hire 30 more people over the course of the last year and a half, but I basically have now 30 more people as if they're hired because AI and automation is doing a lot of the work for us. So you need to lean into AI today, not tomorrow, not next week, not next month. If you use AI to your advantage, 5 years from now, you'll be in good shape. If you throw up your hands and say, I'll just kind of wait what happens, or I don't like it, it's destroying jobs, you're going to have your job destroyed
Mhm.
sooner rather than later.
Yeah, that's just reality. AI is a tool. AI needs to be manned, and AI needs a human oversight. So that is my messaging, and that will always be my messaging. When the World Wide Web came into fruition, it was the same. Oh my God! But here we are. You can't go anywhere without www
Yeah.
anything. Okay, Google is part of our phones, right? So here we are, and it's going to be the exact same thing. I think any professional, it doesn't matter where you are, healthcare, real estate, finance, you name it, hospitality, it's just a matter of leveraging and making sure it works for you and your industry. So thank you so much.
And if I could actually just from a real world situation, right? So people may or may not heard a story about Blockbuster. Again, I guess I'm an OG, so I know Blockbuster. A lot of the
Yeah,
young people don't
you
know.
keep proving it, Mario. You see,
Yeah,
you know.
yeah. So yeah, so
What are you gonna see next, Circuit City?
and they're in trouble too. They're
Yeah.
in trouble too. Yeah, so like Blockbuster could basically be people today that's
Yeah.
not taking AI seriously and using it.
Right.
Blockbuster had a chance to buy Netflix. They said like, no, it doesn't work. Streaming, how can you stream something that doesn't work? And now Blockbuster's no more. And Netflix is not only the biggest streaming company in the world, but Netflix is going to have the biggest boxing match ever in the history of life in November when Canelo Alvarez fights Terrence Bud Crawford.
Um,
Right? Netflix is now doing NFL games. Netflix has a contract with the WWE, the largest wrestling organization in the world. You think the owners of Blockbuster, or now their kids, because I don't know how old they were, are kicking themselves in the foot because of that decision? Right? So AI is here. You have to embrace it. Don't even embrace it, but dig into it. I say an hour a day. Our daughter, she's 11 years old. An hour a day, she's doing something AI, learning with AI. Either that's talking to ChatGPT, having conversations, doing things with AI. It's AI. Like heck, her being 11 years old, when she turns 18, is she gonna go to college? I don't know. Right. And I say this, I love college. I'm actually on the foundation board of my university, Tennessee State University, the best HBCU in the land. So I'm not anti-college, but because of AI and because how things are going, what's college going to look like in 5 or 10 years?
yeah.
We don't know. So yeah.
Yeah. Appreciate that. Thank you. So, in bringing this beautiful conversation to closure, I often ask you. You dropped a lot of gems. I gotta give you that. Okay, and I appreciate every bit of it. So I often ask for my guests to leave either one or a few golden nuggets for a listening audience. We've said quite a bit, and you have said quite a bit. You provided a lot of education on this call. Where can our guests find you first and foremost, or where can our listeners find you? And also, what are the few golden nuggets you would like to leave our listeners with?
Yeah. So where you can find me first off, at Painful Profit. So our Instagram is at Painful Profit. So at Pain, PAYNEFUL Profits, PROFITS. So at Painful Profits, that is my Instagram and that is my YouTube. You guys like, subscribe, share my YouTube channel. On a day-to-day basis, I am dropping gems about how to reduce your tax liability, like I talked about, how to grow your money with our shadow method, how we invest money, which I talked about. And we actually give real world examples. Like I say, hey, had this conversation with a client. This is what's going on. This is what we did and why. So it's not like fluff or hypotheticals or imagine. It's real world examples of how we help people. And those people that we help can be just like you guys. You can help yourself. So strongly recommend going to our YouTube channel, like, subscribe, and like, share, and subscribe. Our website, www.therelaxinvestor.com. So for my book or our coaching that we do, or if you want us to help you investment wise or tax strategy wise, because we do have tax people that work for us, of course, www.tomsfinancial, TOAMS financial.com. So that's how you can get in touch with me. But then what do you need to do? Invest in yourself. So it's a investment hierarchy, right? We'll start from the bottom because that's the foundation. Invest in yourself. That is the foundation of everything, right? The first couple dollars that you get, yes, we want you to grow your money in the stock market. No, coaching, level up yourself, personal development, and spend money doing that because you're going to make more money quicker and you're going to feel better about the process because it was done by you. So invest in yourself. That's in the pyramid. And then the second step of the pyramid, and it's a step, is a house. So again, as a certified financial planner, we lean into actually investing in real estate and stocks, not just stocks. Most financial advisors, they talk about stocks because that's how they make money. Me, because we manage so much money, we're good, right? A house will be your biggest financial investment. If you are paying rent $1,500 a month, that's $18,000 a year that you'll never get back. Now, 3 years, you're still in that apartment. That's $45,000 that you'll never get back. Even if it's the worst house on the best street or the worst house on the worst street, you're building equity, which means whenever you sell it, which we don't want you to, whenever you sell it, you get that $45,000 back and then some. So you guys, as soon as you get the ability to buy a house, stop renting and buy a house. Because again, so invest in ourselves, invest. Then the third thing, that's when the stocks come in. Once we have that house in place, then we invest in stocks. Start with your 401k because your company gives you money. It's called matching, right? If I make $100,000 and my company matches 8%, if I put 8% into my 401k, they're going to give me 8%. I doubled my money. I put in 8, they put in 8, that's $16,000 a year. Over 10 years at $160,000 with compounded interest, you should have over $300,000 in 10 years. Do that for 30 years, that's $2.2 million. That alone, $2.2 million with compounding interest, making 8% a year, which is the average of the stock market. So that's the pillar of investing. Invest in yourself, real estate for your first house. Your first house as quick as possible. 22 years old, you graduate, you're going to be in that town for 2 or 3 years, get a house. When you move, rent it out. Now you're building generational wealth. So the house, first house. And then after you buy that first house, then we'll start putting money in our 401k, max out our 401k, and then you call me and we can really get to the bag after that.
Nice. Thank you, Mario. Oh my God, we could talk for days. But I really do appreciate the advice you're giving, and it goes for everybody. I love how you said at 22 years old, because a lot of in this day and age in 2025, we still have a lot of first generation college graduates.
Mm-hmm.
We still have a first for first corporate job, first person to do this, do that, and all this extra stuff. And unfortunately, the stress of being the first usually have people collapse into themselves,
Yeah.
because it's like, there's all this external expectation that they don't know, which way to go. So knowing that you work with young people is just so comforting and so great to hear. So we appreciate all the work that you do. I am so grateful you made time to have this conversation with me. I'm so grateful you're here to share your gems and your experiences and your expertise. And for everybody listening, um, go check the man out. go on his YouTube, his Instagram, follow. If not for nothing, you will learn a lesson or two. Just listening to real experiences, it far exceeds anything. So please, 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 life is hard. Like the man said, life be lifing. We all know this. Life comes at you fast and hard sometimes. But if you're prepared and you learn a lot and enough, you're able to navigate a lot of those, valleys and hills and everything that comes with it. So it's so refreshing to talk to you, sir. And, I'm hoping we can get to do this again sometime because, with the ever changing world and things coming to sight, people are going to need directives. So I appreciate you.
Awesome. Well, now, be blessed, and thank you for having me. I really appreciate it, and congratulations to you on all your success. Your
Thank
platform
you,
has
sir.
continued to grow.
Thank
It's
you.
about consistency, right? So people do 3, 4, 5, 6 podcasts. They call it quit, but it's consistency, and that over time just kind of continues to have you grow. So congratulations on all your success.
Thank you, thank you. And maybe this is a good time to announce this, but I'm going to put this all over as well. So you've actually encouraged me on this episode to actually step out and create my content because I'm one of those people who love to be a best kept secret as a nursing professor, as a business person. I'm stepping out. So I've actually was invited to join a network, a C-suites network. So my podcast is going to be on a bigger platform, talking about aligning yourself. It's such thank you, sir. Thank you, thank you, thank you. So
Yeah,
I'm going to be aligned with decision makers, C-suite execs, and it's up from there. So I'm very excited about that. So I thank you, thank you, thank you,
awesome. Congratulations. There you
thank you,
go.
sir. Thank you.
Success has receipts.
I know, I know. It's so. I'm humbled and I'm grateful, and like you said, that consistency, the results don't always come early, but with time, you get noticed, and people, you show up as your authentic self, and you will attract the right people, the right energy, and the right opportunity.
Yeah,
And this is for everybody, not just for us talking on this podcast. If you have that thing in your heart, go for it, do it, it'll come to fruition. Don't you worry. All
yeah.
right. Thank you, sir. Thank you again for being here. And thank you, everybody, for listening. Please, please, please go and look for Mr. Mario Payne. If you forgot any of the things he mentioned, don't you worry. We'll have it in the show notes. You can just click in and go to see the man and listen to him. All right.
Awesome.
Thank you again. Have a great day.
All right.
Bye,
Peace.
everybody.
Thanks for tuning in to Abeg's podcast. If you enjoyed today's episode, don't forget to subscribe, rate, and leave us a review. It really helps us out. We'd love to hear your thoughts and continue the discussion. So join us on social media or drop us a message. Until next time, keep exploring, stay curious, and keep pushing the boundaries of your world.